Good afternoon. This is Todd Horwitz coming to you from the floor of the CME Group in Chicago. And as we continue to track the 30-year treasuries, U.S. treasuries, we see markets are again under a little bit of pressure. And I think this is something that we have continued to watch, and we kind of nailed up at around the 158 level, and now we're down in the 152, 153 level. Today they were a little bit softer. They were firmer early, and then they broke pretty hard, and they've rallied back a little bit. But overall, we are seeing a lot of pressure, and I think that's because rates are headed, I think, to at least to 3% in the U.S. 30-year. When we look at the overall market, again, you've got the Fed actually giving some hawkish talk, and the equities have not done any kickback yet. So I think you look for this to continue, and you look for these markets to continue to be under pressure. And as we make this run up to 3% and maybe higher, I think you've got a big jobs number coming out on Friday, which may indeed be the impetus to either push them back up, which I don't believe to be the case, or to actually push them down. I think the best out of the jobs number would be a rally into some resistance and then a big break. And I think that's more what we're going to see. If all the data that we're seeing right now based on jobs and based on the economy and everything else, then certainly the Fed will raise hike rates, and they won't have to do it through the back door by selling their own. So I think that's what we're looking for. We're looking for, again, our first target here is 150, but again, eventually we're looking for much lower than that. But again, we try to take it one level at a time. So let's look to see what happens off the jobs. Let's look to be a seller right now. We'd look at 154 as a great spot to step back in again. That's the way I see it. This is Todd Horwitz coming to you from the floor of the CME Group in Chicago.